It's Cash Money Master once again, coming to you with another video that has to do with cryptocurrencies. In this channel of mine, I talk about the importance of cryptocurrencies. How well do they do? How bad are they doing? The headlines and much, much more. But we need to be mindful that there is a currency that is currently being used all over the world, which is known as paper money, which is fiat currency. So before we talk about cryptocurrencies, we need to talk about the currency that is known so that we can understand what is the difference between the two currencies. Well, the definition reads as follows. Fiat currency is centralized, issued and controlled by third parties, while cryptocurrency is decentralized. Transactions are peer-to-peer. Cryptocurrencies exist in limited quantities, while fiat currencies can be issued at will. Bitcoin, for example, is limited to 21 million units. So this simply means that fiat currency, being paper money, is controlled by a third party, is also issued by a third party, and the third party can withdraw fiat currency as it so wish. But on the other hand, Bitcoin is a decentralized currency. It's not controlled by a third party. When a transaction is made, it's from user A to user B, or from a person to another. There's also limited quantities, and the limit has been set to 21 million units of Bitcoin. So this is the difference between Bitcoin as well as fiat currency. But let us find out, what is Bitcoin. Now, this is the simple explanation of what Bitcoin is. Well, Bitcoin is a cryptocurrency, a visual currency designed to act a visual currency designed to act as money and a form of payment outside the control of any one person, group, or entity, thus removing the need for third-party involvement in financial transactions. Now, that's the simplest explanation of what Bitcoin is. And if you want to get full details of what Bitcoin is, then you have to search for Bitcoin white paper and read the whole white paper. It will tell you who came up with Bitcoin. Let me just read this part so that you can get an idea of what I'm talking about. The Bitcoin white paper simply explained, published in October 2008 by an individual or a group under the name of Satoshi Nakamoto. The Bitcoin white paper laid the groundwork for a fundamental change in the execution of global payments and the transformation of entire industries in terms of data management. So it explains that Bitcoin was published in 2008. It was by an individual or group of people named Satoshi Nakamoto. This white paper lays a fundamental change in terms of the execution of the global payments and the transformation of the entire industry in terms of data management. So this is just an idea on what Bitcoin is and who came up with it, and some of the problems that they are trying to solve, just to give you an idea. But you can read the whole white paper, you can find it on the internet. It's available there. So Bitcoin has performed well, and it has also performed bad as a cryptocurrency because it's quite volatile. But let us find out what is volatile, because they say it's a volatile currency. In bullet point number 2, the definition reads as follows. It's liable to change rapidly and unpredictable, especially for the worse. So the price of Bitcoin can go up and it can also go up. It can be in a positive, it can be in a negative. And this continues to happen from time to time. And it's pretty much difficult to predict it. Hence, it's unpredictable. It could go up for the better, or it can even go down for the worse. Now, Bitcoin is the first cryptocurrency that was successfully designed and presented to the cryptocurrency space as a digital currency that is able to be transferred from a person to another. Now, after this cryptocurrencies, developers of other cryptocurrencies came into place, and now we have just more than 2,000 cryptocurrencies. Now, Bitcoin being the main cryptocurrency, the number one listed cryptocurrency in the world, well, it's not the only currency that is volatile. Let's have a look and just get an idea of some of the cryptocurrencies that are volatile. To find out about these volatile cryptocurrencies, you can simply type on your browser crypto space, just between crypto and bubbles. Just type crypto and then type bubbles. Click on it, then click on cryptobubbles.net. You'll be taken to this screen right here. So I'm going to read about 4 coins that are doing well and 4 coins that are not doing well. So the first 4 coins that I'll talk about, which is coins that are in the green. We have Algo, which is up 4.8%. We have XRP, it's up 5.5%. There's Gala, which is up at 5.8%. And we have Cent, which is also up by 3.6%. And then the coins that are not doing well, we have XRD is down by 7.7%. There's RLB, it's down by 5.9%. We have Lang, it's down by 3%. And we also have BSV, which is also down by 1.4%. Now, this cryptocurrencies that are volatile are affected by what is happening in the global market. Now, let's just have a look and get an idea of what are some of the things or some of the news rather that are impacting this very market, positive or a negative way. So let's go to coin market cap headlines. Okay, this is where you find the headlines. It's coin market cap headline news. So you click on it, and then you'll be taken to this screen right here. So the first news that we have is about Ethereum. EIP 7503 takes privacy to new heights at Execution Layer Summit. You can read all about it on Crypto Potato, pardon me. And then there's SBI Holdings and Trade Finex partner to drive blockchain adoption in Japan. And then we have Chevron Corporations is showing potential to hit all-time highs. Then we have FunEarth previews Ethereum futures ETF with a quirky TV ads amid anticipation of early launch. Now, these are some of the headlines in the cryptocurrency space that impact cryptocurrencies in a negative or a positive way. Now, let us proceed and read about actually the 4 cycles, of cryptocurrencies. Let me just quickly go to my mailbox because I have a perfect example of these market cycles. So let me quickly go into it. All right, let me zoom it so that you can see it. Well, this is an example of a market cycle in cryptocurrency. This is the 4 years of Bitcoin. Well, these periods have been presented to us and broken down in 4 years, just like we can see right here. We have 2022, which is the previous bear market. This is 2023, is the accumulation year. We have 2024, which will be the Bitcoin halving next year, Bitcoin halving cycle. And then we have 2025, which will be the bull run. Now, let us look at a typical example of the previous 4 years of Bitcoin cycle. We'll use the latest one, which is from 2018. As you can see, the price of Bitcoin was going down. It was depreciating in the year 2018, and that was the bear market. And then 2023 was the year for people to accumulate, to buy Bitcoins. It was an opportunity for them to get these cryptocurrencies as their price is so low. Price has gone down by 80, 40. Some cryptocurrencies are down during this accumulation year by 50%, some 60, 70, even 80%. And then we have the 2020, which is the Bitcoin halving cycle. So Bitcoin halving cycle simply means the Bitcoins that are mined have been reduced to half. This is to counteract inflation and ensure that there's a positive impact in terms of the price of Bitcoin and other cryptocurrencies that follow the footsteps of Bitcoin. And then we have the bull year, which was the previous bull run in 2021. This is when the price go up, the price appreciates. And when this happens, people who have positioned themselves very well and they were taking profits when the price was going up. Some of them managed to have a lot of profits and purchased whatsoever they wanted to. So that's an idea of what the 4 years of Bitcoin cycles have been structured. Now let's go to the Bitcoin halving definition, and then we'll go to the live chat. So Bitcoin halving is when the reward for Bitcoin mining is cut in half. So the Bitcoins are cut in half, and this takes place every 4 years. The halving policy was written into Bitcoin's mining algorithm. This is to counteract inflation by maintaining scarcity. So this was designed to ensure that there is scarcity so that the price can go up and crypto investors can be able to get some profits in the cryptocurrency space. Now let's go to the Bitcoin halving cycle live chat. Pardon me, Bitcoin halving live chats. Let's go live chats. Live chat. Live chat. Bitcoin halving live chat. Okay, can check it on CoinGecko or other platforms. But as per CoinGecko, it says the Bitcoin halving cycle will be in approximately 208 days, 21 hours, and 9 minutes, which is estimated to be in April the 25th. The year is 2024. The 25th of April, 2024 is the estimated date and time of reward drops for Bitcoin halving. Now, that's Bitcoin halving for you. And now let us proceed. Let me see. And yeah, today I would like to talk about the importance of Bitcoin. And if you consider investing in cryptocurrencies, and if you're wondering if is it important to have Bitcoins, and do they really exist, and can you invest in them? Well, I hope this will answer your question and you will make up your mind. So let us find out the billionaires, or rather the millionaires and the trillionaires out there, who have purchased this currency that you might consider investing in or not? Well, let's check it out. We have here the largest asset managers in the world. The largest asset managers in the world, we have BlackRock, Amundi, Morgan Stanley, we have Fidelity Capital Group, we have Goldman Sachs, we have Vanguard, BNY Mellon. So let me just talk about one of them, which is listed as number one, and see how many assets they are holding. Well, BlackRock is the world's largest asset manager with 9.42 trillion in assets under management as of June 30th, 2023. So they have 9.42 trillion in assets under management as of June 2023. Why am I showing this? Why am I showing you this? I want to find out if you're asking yourself, does Bitcoin work? Does it really exist? If it doesn't exist, if it doesn't work, I need you to read this information, and you don't have to answer me. You will answer yourself. And after watching this video, I need you to think deeply about this. Now, the question that I asked is, does BlackRock, being one of the largest asset management holders in trillions, do they have Bitcoin? Do they hold Bitcoin? Do they buy Bitcoin? Now I ask the question, does BlackRock own Bitcoin? Let us find out. It reads, BlackRock may already be the third largest Bitcoin holder in the world. Over the last few weeks, a mysterious Bitcoin address has accrued more than 100 billion, no, more than 100,000 BTC. Let me read it again. BlackRock may already be the third largest Bitcoin holder in the world. Over the last few weeks, a mysterious Bitcoin address has accrued more than 100,000 BTC. Well, I'm from South Africa. You can do the math from the country where you come from, but this is what I came across when I made the calculations. 100,000 BTC, that's what BlackRock is holding. And I calculated the amount in rents to find out how much is it. And I've realized that the amount is 50 billion 913 million 8,590. I think I stand to be corrected. Let me just calculate the numbers. It's actually, pardon me, it's actually 50 billion 913 million 8,590. Yes, I got it right. 50 billion 913 million 8,590 in rents. That's how much they are holding. So the question still stands. Does Bitcoin work? Is it worth it to buy Bitcoin? You will answer those questions yourself. I hope that answers your question. Now let us move on to the importance of having a cryptocurrency portfolio. Let's go to it. There's this one that I like, and you can search for it and find it like I normally do. Doing this for you from the Forex Academy. This is the portfolio, typical example of having a long-term cryptocurrency portfolio. I'm getting to this point because some people might consider investing in cryptocurrencies as per the previous point that I mentioned regarding BlackRock. But you need to have more than one digital asset to consider, actually, because it's not financial advice. It's your choice. It's your money. You do whatever you so wish with your money. This is just me presenting this information to you so that you can be informed. And if you consider investing in cryptocurrencies, you have an idea on what you need to do. Now we have a long-term cryptocurrency portfolio, as it is important to diversify and not focus on one thing. Now let us have a look at a typical table of a cryptocurrency portfolio. We have BTC, which the code is BTC, the amount is 2, the BTC value is 1, USD value it's 1,756.01. Then we have wallet value, which is 3,512 and 2 cents. The exchange that was used as an example is Poloniex. Then we have percentage of holdings, which is 56.19. Now let's have a look at another cryptocurrency from the bottom, which is number 3 from the bottom is STR. The code is STR. The amount is 1. The value is fractions of a penny. The USD value is 3 cents. The wallet value is 3 cents. The exchange that was used as an example is Poloniex. And the percentage of holdings is 0.00. Now let us read some of the information that has to do with cryptocurrency portfolio. And this is not a short-term, but a long-term cryptocurrency portfolio. So if you consider investing in cryptocurrencies, you might consider thinking long-term. Now, historical data shows that the crypto market has returned over 900% since 2017. Of course, the journey hasn't been all smooth, as evident from the often unprecedented dip and high trends of the market. But in the long haul, its valuation has been increasing as more investors join the trade. With this in mind, the idea of targeting long-term gains is more appealing than chasing short-term profits, which are often not as much as the former. Let us proceed and read more info. While investing in the long term promises greater returns, it should be noted that the method requires patience and keeping your emotions under check in all market times. To achieve this, you should only invest an amount that you can live without. So no matter what happens, you won't have the urge to sell your cryptos to sustain yourself. Also, having a cushion to fall back on will prevent you from panic selling. Now, why should you consider long-term crypto investment? Foregoing the short-term profits in favor of long-term gains is not only highly rewarding, but also less risky. As such, you don't have to worry about missing out on leveraging into a position or time in the market. Day trading or short-term investment is characterized by numerous transactions whose fees can quickly accumulate and eat into your profits. But when investing in the long term, all you have to do is pick a few cryptocurrencies and then wait. This helps reduce the number of transactions, saving you the fees that come with active trading. Now, indicators of long-term value. Building a long-term portfolio boils down to the type of digital currencies you invest in. With over 1,000 cryptocurrencies in the market, it can be overwhelming to choose one that pays off in the long run. Here are a few factors to consider when choosing cryptocurrencies for your long-term life portfolio. You might consider market cap, utility value, industry. Don't be too rigid, and then they have their conclusion right here. So you can find this information from forex.academy on how to build a long-term cryptocurrency portfolio. Now let us move on to the importance of having a crypto mentor, because as you have seen on the previous post by, pardon. Okay, so now let us move into the crypto mentor. What is crypto mentor? So crypto trading mentorship programs have become indispensable resources for individuals interested in venturing into the cryptocurrency market. These programs offer quality education, personalized guidance, and risk management strategies to navigate the volatile crypto space successfully. Now, this is why it's important to have a crypto mentor so that you can be educated, you can get a personalized guidance, and you can have a good risk management strategies so that you can be able to navigate this volatile crypto space successfully. So consider having a crypto mentor. I mean, there's over a thousand, according to Forex Academy. There's over 1,000 cryptocurrencies, and it's not simple to choose the best cryptocurrencies when there's so many cryptocurrencies. So you need someone who is well experienced, someone who is well invested in cryptocurrencies in terms of time, learning and understanding what is going on in the cryptocurrency space, reading the charts and all of that. And that is a lot of information to grasp. So having a cryptocurrency mentor will give you peace of mind, because you know that when a mentor buys a coin, you buy it. When a mentor sells a coin, you sell it. When the mentor holds the coin, you hold it. When you need a mentor to communicate with, you can communicate with the mentor directly. So that's the importance of having a cryptocurrency mentor, so that you can be prepared for the next bull run and you can be well positioned. Now, I have a cryptocurrency mentor and I would like to recommend one. To find out about my mentor, you can just simply click on the link that will be available in the description of this video. You can just copy the link and search on your browser, then you have all the details there. So I do thank you very much for tuning into this channel of mine. Make sure that you subscribe to the channel, click that notification bell to get more videos, like this video, share these videos that I have posted with your family, friends, colleagues, and everyone that you like to be informed in terms of cryptocurrencies. And furthermore, I'll also include a link on how to fund your Binance account using your bank account. And that's about it. Cash Money Master signing out. I'll see you in the next video. I thank you.